This week, who will Fed Chair Powell listen to from the Fed chairs of the past? Will it be Easy Bernanke or tightening Paul Volcker? Let's start off right here, right now, with the 10-year. Obviously, this week is going to be a biggie because the contagion has started and everyone is looking at Jerome Powell of the United States Federal Reserve to see what he will say and do. And the thing that they are looking for, will Mr. Powell not raise rates, or will Mr. Powell raise rates by 25 basis points and then give a speech about how they are going to hold? One or the other probably will be what will happen moving forward. I don't see the Federal Reserve continuing on the path to raise another 25 basis points if they raise this time here in March. So all eyes are on Powell this week. So we understand that's happening. Now let's look at where things stand. We are at support levels. So this is a support level right here. So with that support being right there, a break below support would garner a further move down. Now, as we said last time, very surprised that this movement happened this fast, but markets are telling you something. And we're going to look in the next slide what they're telling us. So let's go ahead and we're going to get rid of that. And we're going to see where this goes to if it decides to swing. And if it decides to swing, we are going to head down to 2.96 to 2.8 is where this is going to head to. So I would expect something like we range here. So we get into a range here. And we may do something like this and then down. But I think the way is down. I don't think that we go past this level again. But I think if we do pop, we'll pop here and then we'll turn around and head down if we do pop. Otherwise, we'll stay in this range and then we'll buckle down. But either way, it looks like we're going to head down further into the 2 range, maybe even the 2.5. But we'll see. So let's look at the yield curve. Now, we see that the front end of the yield curve last month, this is last month, is higher, was at 5%, whereas the 10-year was setting below 4%. But we see what has happened now is that the yield curve has dropped below, or the front end of the curve has dropped below 5%, but the 10-year continues to head lower near 3% mark. Also, the back end of the yield curve, again, lower. All this is moving lower. If what we saw the last few weeks of bank contagion or bank failures, if we saw something where the front end was heading down and the back end was starting to rise, and we were starting to get that curve starting to equalize, and then eventually get it to go like this, all things would be in pretty good shape. But seeing the curve still stay inverted and dropping all the way across is a bad thing. That's telling us that these bank failures are just the beginning. There's much more contagion to come. I'm not going to sit here and speculate what all that contagion is. All I will say is this, and what I've been saying for quite some time. We have issues in this country which I don't believe are accidental. That's as much as I'll say on that. But we have issues in this country, but we have issues which, from what we are doing now as a Federal Reserve, is producing issues across the globe. And that's what I refer to as a sovereign debt crisis. As we are contracting in dollars, lending is now contracting. I have a good friend who's in commercial lending. he's saying that it's getting much harder. He has to work twice as hard to get the clientele that he's getting this year as he got last year. And he's saying that banks are unwilling to lend. They want you to meet a harder criteria, but the criteria is so high that the borrowers do not want to even take the risk because they have to put so much more down now. They have to be, the qualifications are so much more stringent that they don't want to take the risk. And so it's getting very tough out there for lending and for the banks and for the borrowers. And both parties are not willing to take these risks. And if you do not have lending happening, because we know that lending is part of money creation, if we don't have the lending going on, we have dollar contraction. And when we have dollar contraction, that contagion spreads, and it spreads throughout the world. Now, I know that you hear about Jerome Powell's going through the swap lines, trying to help out people overseas. It's not enough. It's not enough at all. So we have big problems, not only here domestically, but globally. And the sovereign debt crisis, you're going to see it increase more and more as time goes on. You look at the VIX here, boy, makes you cringe. Look at that. It looks like this thing is getting ready. It's just getting ready to boil over and pop. Really looks bad. And what could we see on this? Well, let's just kind of mark out where this thing could go. So we're building here, folks. This is a build to push out. And we marked this out last week. I believe that this is going to push out. It's going to go top side. And it'll probably jump. Its first jump is going to break, but pull back. I think it continues up. I think we get into the 40s on this move. So watch for that, because what that means is that markets like the S&P could start to really roll over and take off to the downside. Now, I know that this week, those markets like the S&P, the Dow have really not gone anywhere. Our NASDAQ has really taken off. But if volatility increases here, folks, it is downside move. Do not look to go long. It's downside move because it is risk off time. These markets are going to go risk off full tilt. So don't get involved to a long side move if you see this thing break channel and start heading to the top side. Keep your eyes on the VIX this week, especially come Wednesday when we have the Fed jawbone the markets. Be very careful, because if this breaks out, then again, we're going to be looking for markets to go to the downside. S&P still in this massive wedge. Now, we could break to the downside on this wedge, or we could break out and break down. I would prefer to see this break out, get a bigger swing to push it down. But again, it depends on what is going to happen moving forward with the VIX. If the VIX pushes out, this is going to push down through the bottom of this and continue down. So it's going to push through, pull back, and head further down. We will be short this if the VIX breaks out. That's the plan. It doesn't matter if it sounds like Fed is easing or if they don't ease. It doesn't matter. It depends on that VIX. The markets are not ran by the Fed anymore. They are ran by risk and contagion of risk, and if there's risk on or if there's risk off. And right now, markets are looking at things. We looked at the euro dollar futures. It's telling us risk off. We want to be out of risk. We want to be into security. And we're going to look at the euro dollar futures next, and then we're going to look at dollar, and we're going to see what all those things are telling us. So this is December 23 contracts. And we see here that, again, kind of looks like the VIX. Looks like we're building up for a break. And it's more likely that this will break topside than it will break downside. If the Fed comes out Wednesday and says, hey, we're going to actually do a 25 basis point cut, that might simmer this down some. That might lower the contagion. But the fact is risk is really bad right now. Banks are running for cover. And so they're hedging. And that's why this is blowing out. A lot of hedging going on, a lot of protection being sought after to protect from what has accumulated, or what the Fed has done by taking wealth, and basically, because banks hold most of these bonds and notes and bills and mortgage-backed securities, and they just crushed them, and the wealth went off the books. Most banks, like I told you last time, don't have very good risk departments, and they don't do a very good job of risk sometimes because, they either have a lot of borrowers or they have a lot of bonds. They got a lot of securities on hand, fixed assets to protect them. But it doesn't matter. When you got to run on the bank, it's really tough to control that. And a lot of these banks aren't liquid enough to do it. Some are, the bigger ones, but you're looking at the regional section. That's why we looked at the regional banks, and they were getting crushed. The regional banks are smaller banks. They don't have as big of balance sheets, but they don't have as many depositors as well. But it gets a little touchy if you kind of are walking on the edge there. And so we're seeing a lot of these failures coming into play, not only in this country, but overseas. And the European banks are twice as bad as the U.S. banks. They're really bad shape over there in Europe. So it's if that thing gets away from them over there, the contagion is really going to start to kick in. So that's why you see this chart like this. We got a lot of hedging, a lot of protection going on. And this looks like it's about ready to blow. This was quite a move, and we said would set tight on it for a while. But if we look at this thing here, this looks like it's just wedging up to take off. And if I had to pick a side, I'd have to say it's going to break long. So really, the way I'm looking at this, something like this, and out we go, and up we go, probably up to the next level, about 97. So this is not looking good, folks. Not looking good at all. Better hold on to your pants on this one. It's going to be a rough ride. So if everything goes south, what will happen to dollar? That's very interesting. So as you know, we've been short dollar, but with the change in environment, we are probably going to start collecting on that short, because the environment is becoming too risky to hold the dollar. Because if this is true, if this is starting to happen, banks are starting, this contagion is going to start to continue. What will happen is there will be more and more a lack of dollars. And if there's more and more a lack of dollars, we should see dollars strengthen. Now, it may weaken in the first part of this move, but after that, it should strengthen. And I'm not sure if it gets down to our target of about 96 down here. It could get down there before it reverses like we were expecting. It may or may not. There's too much risk to hold the amount of the trade that we're holding right now on it, though. So we're going to cut that by 3/4, and we're going to leave probably about 1 to 2 positions on it and just hold it there. We're not going to go ahead and trade it short term. We're just going to kind of hold what we have, see what this thing does, see what happens, what the reaction is to the environment that's out there right now. And if it breaks up and above 108, we're going to take those last 2 positions off, and we're going to look at getting long and strong dollar. Again, I do not know the effect that this is going to have on it in the immediate future. Long term, definitely can tell you it's going to head higher, but I don't know if it heads lower first before it heads higher, and that's really what I'm looking for. So I'm going to really cut risk down in dollar moving forward this week. This is the NASDAQ. Okay, this is what's going to happen. If we go ballistic on the VIX, this is what's going to happen to the NASDAQ. We're going to head on up here. We're going to hold there, create a double top, and then we are going to roll. And we're going to come down nice and hard like that. Okay? That's what we're going to look for on the NASDAQ if we hold this zone right up here. So we'll hold right up there at this resistance. You can pretty much expect this to start and make its way down there. Well, how will we know it's a hold? Probably if we get back down to this area right here and it breaks that area. See that resistance right there? If it breaks that area, we probably come back down here, hit the support, bounce around there for a while, and then we will know 100% for sure once it breaks right there. If it breaks this support zone here, she is gone. So this would be when we would know 100%. Anything between here, it could still be in the range. It could still be ranging to break up higher, but a break of this support right here, it's done. It's finished. It's going to go much, much lower. Then we would take the full move of this swing from here to here down. And we would target that as our destination. So look for this week to possibly hold. The holding point would be right up here about 1.3, about 13,000. Just put it at 13,000. It's a little below that, but just make it even for simplicity. So that's where I see it going to. After that, I need a solid break above there and a close above there. Then a pullback to continue to stay long this. US 30 went ahead and took profits on that. I'm not gonna hold on this. It's too rangy. It's too choppy. It really doesn't look like there's a lot of mo there, people. It hasn't shown itself. It may show it later on. I'm not saying it won't, but I'm not gonna. It's too risky to stay in this trade now. So I've exited the trade with some profit. I'm going to hold neutral. Again, if we break this area right here, if we break this support zone right here, this is a huge support zone. We break that, I will go ahead and get short this because we are going to come at least down to here. And that sets about 28,653. So yeah, be very careful. I would be very cautious here. I would not be looking for a strong long yet. Need to see some things happen. But if this ranges here and it breaks up, I would definitely look at getting a long above this resistance zone right there. I would get long above that. And that's how I'd play the game on this. Gold trade was absolutely phenomenal. Probably one of the best trades this year thus far. Huge profits off of it. I'm looking for it to go a little further. I have taken some profits off this. I am in it. It's in a range right now, preparing for another breakout, and we expect that breakout to go up to at least right around 2040, somewhere in that neighborhood. So gold doing great. We may get a little bit more of a pullback here. The range isn't established on it, but they are in an accumulation phase on it. So be careful here. It could break downside first a little bit. After that, that last move up could break down a little bit and then head back up. So just be careful going along right here if you're not in this trade yet. But I do believe we have one more break to the top side before it levels off and makes a nice little correction in it. But yeah, gold, an excellent trade this week. We called that very well. So congratulations if you took that trade. Bitcoin, man, almost called this thing to a T. Very good trade. Went very well. We pulled most of this today. We called it almost to perfection, and we are now out of this. I want to be cautious going into this week. Again, gold, I got a little bit more on that. Bitcoin, I've reached my target. I'm setting pretty on that. So I am out of Bitcoin right now. and just going to hold and see what happens here. Could Bitcoin go higher? Of course it could. It depends on how much of a contagion this is, how much panic it creates in markets. The more panic over basically our financial system, the mechanisms which hold the dollars, the more you're going to see gold and Bitcoin increase in value. Okay? That's just the way it is. It's the only place where people think they can go. So that's where they're going to go. That's where the flows are going to go. And you could see Bitcoin go much higher. But we're going to hold neutral on it until we see a definite case of more momentum. Right now, we've gone quite far in the move. We want to see if we get a pullback and then look from there if it's going to rise higher. I'm not going to make a far out prediction on this because you got to take this stuff day by day. But if I had to guess from what's coming and from the profile of the VIX, I would say this is going to go higher. So be prepared for that to happen. Euro Aussie, we're long this right now. I'm a little concerned about it for the simple fact is I don't really have dollar pegged down about what it's going to do moving forward. If dollar really takes off to the upside, then this trade here could dissolve quickly. Again, emerging markets, not a huge thing right now. We're in a global contraction. So Aussie dollar probably won't do much. But again, if dollar really increases in value, this thing's can go to the downside. So I'm very cautious being long in this. It really hasn't done much yet. So, I can get out of it anytime. But a break below that resistance zone, which is now support right here, a break below that, we are out. We are out of this trade. It's not going to happen. So we're just going to stand by on this one. Not a lot on it, not a lot of risk on it because of that. A lot of uncertainty. So just waiting to see what this does. And if it takes hold and breaks above this high here, we'll add to the position. US oil came down, almost hit our level to the T. I am out of this trade right now. I'm not in it. Took profits on it. It broke to the downside. We got it on the pullback and took profits in this, but out of it for now. I have no idea where not gold, but oil goes from here. So I am neutral on this trade. I'm out of it and neutral on it. Dollar yen continues to grind lower. Again, I want to be careful on this because I don't know what the dollar is going to do. So what I'm going to do is probably tomorrow or this evening, I'm going to take profits on this and just hold flat on it because, again, I have no idea what dollar is going to do in this environment right now. Our pound yen bottom held on the wedge. So what do we do here? What do we do now? I think it would probably be advantageous for us to look at creating a long. And I believe that that's the direction we're going to go to because this held pretty good down in here. I would really like to see it break this level here before it went long, before I got in on along with it. But it doesn't have to. But where it's at right now to where it breaks out, I'm going to be putting a long in on this currency pair because it looks to me like we could be heading that direction with a cheaper yen. Pound will stay a little bit more stable. When it comes to dollar strength, it will fight a little bit so we could get that move to the top side. There may be a tug of war here. Pound may really start to fall in value against the dollar, and this thing just stays sideways. But again, we're looking at level by level, and it looks like there's a buildup here, and I think it's a buildup to break to the top side. So we're going to look at getting long it, and we'll just see how it does. We won't get too hard long. Won't put too much leverage on this. We'll just see where it goes. But I am long pound yen. I'm going to wrap up this video this week, again showing you the regional bank, the ETF by sector spiders. Does this look like it's finished? No, it doesn't. Even if we get a move topside where this thing pulls back and rolls over, I think we go down to here. So that's it, folks. Good luck this week. Again, news is Jerome Powell and the Fed. It's going to be on the docket. Main thing you got to look at, be careful trading that if you do decide to trade it. But look for, in my opinion, somewhere in there, they're going to have to start to consider lowering rates. Take care. Good luck this week in your trading.